We've got a very special guest, Mihir Doshi, joining me here on the show. Thanks very much. What's your take on the markets? Do you have a take these days?
Well, first thing, congratulations. I think this is part of your second anniversary, so all the best and good luck in the future. Take on the markets, Indian markets. I think we've obviously gone into a consolidation phase. I think people are would love to be optimistic on India from a longer term perspective. The flip side is the headwinds, maybe because of oil, maybe because of inflation, maybe because of the political situation, are concerned. So they were net my take on the markets ain't really going too far from these levels, and if anything, probably a bit negative.
But what's making you negative? So, the whole inflation story, I know, but let's get into a little bit of a specific scene. What's going on in the markets, the mind currently?
Okay, so what is the investor thinking about? Like you said, inflation clearly is playing up in the minds. High interest rates are playing in the minds. I think corporate India, how focused are they on investments? Are they getting distracted by the events in the country right now? Are they slowing down? Will we see a slowdown in investments? And therefore, and will the high interest rates have a knock-on effect on the earnings going forward? I think the perspective is clearly there's concern.
As a banker, are you getting worried about corporate India as such? Is the investment cycle taking a knock?
Not yet. I mean, from a very narrow, from a very, very short-term perspective, as a banker, yes. If you look at the capital market calendar, for example, the equity capital market calendar in India has dried. So as a banker who's trying to do deals, yes, it is a fear that things are going to be slow in the next couple of months. But having said that, take our own example. We tapped the bond markets for a couple of our clients in the last few weeks. Highly successful. I think it's a balance. I think from an equity market perspective, yes, I am concerned. But it's not as if I'm overly concerned that the business is dead as you know it.
Okay, we'll get into India Inc. in just a bit in detail. But what is the signal coming from the global markets? Is the money flow still around? And if it is it moving towards India or moving out of it?
The money flow has been, as the numbers show, has been fairly non-indicative of optimism. It's kind of neutral. I think we had negative, then we turned positive. Again, it's partly negative at the end of last month. I think the global events are probably the bigger concern, actually. Maybe Greece, maybe the US environment, unemployment, and which concerns people. And I think, actually speaking, the perception is and the hope is that if the developed markets struggle, emerging markets again will re-emerge as the opportunity for the investor, and we'll see money coming back.
But why do I get a feeling actually that theory may not hold this time?
It hasn't, and I think that your feeling is a function of the last 6 months where actually money has actually gone back or has come back. Yeah, I think the actual perception for the US actually is we've had some weak numbers in the last couple of months, but net there is cyclicality and there's growth happening. And there is opportunities back in the States, leaving aside maybe the Eurozone, Greece specific, which seems to obviously needs to get its act together.
True. Do you think that this whole decoupling theory is, while of course it's worked at some junctures and then it hasn't, but today we're going through a bit of a phase, aren't we, where we're stuck with the world which wants to see the West prosper once again, but it's quite not seeing it. Per force, they don't want to make another move into the emerging markets because they seem to have taken the cream off the table.
Yeah, and I think this concept of wanting to see the West succeed and temporarily not seeing it, I think at the end of the day, net you can't write off the West, and you can't write off the consumption, you can't write off the growth in the West, especially the US. So I think it's maybe, again, like I said, cyclical in a downtrend right now, but there is clearly a belief that the West comes back, and they will look at that. So I think in the long run, the US does come back.
At Credit Suisse, what are you factoring in about the European situation?
So the hope is it gets constrained at the Greece level. It doesn't have a knock-on effect on Spain or Italy, and the belief is that that's where it is, what the outcome comes out to be, that Greece needs to get resolved. They need to restructure the debt. They need to figure out what cost cutting they do, what assets they sell, which is part of the big program which they've announced, which needs to happen. And it doesn't have a contagion effect on the rest of Europe. And I think that's probably the belief we have, that it's not looking rosy, but it can be contained. I mean, our belief is that Greece doesn't leave the EU, for example.
Is India very concerned about Europe, or is it more concerned about show me the money? Why isn't the money coming?
And which is, like you said, the Indian markets very clearly are driven by global liquidity.
Yes.
So in a perverse manner, yes, they are concerned about Europe or US, because if that has a knock-on effect on liquidity, they're concerned. But as a trading partner for India, it's less of a concern. But it is concerned, like you said, show me the money.
So where is the money sitting? There have been times in India when you've been able to gauge that, money is coming in from Japan and some years ago, and then we had enough money coming from the US. What kind of capital flows are we seeing from an institutional point of view?
Into India right now, like I said earlier, I think we're seeing fairly limited flows. Where will the money come from next? Japan was an unusual avenue of money a few years ago. There's the last bastion which had not come into India.
Right.
And I think I'm not sure there's any specific pocket of money lying around which hasn't come into India yet. So is it the Middle East, for example? Have the Kuwaitis come into India, not come into India, or the Qataris come into India? They probably haven't come in a big way. I mean, that is a possibility. The Qataris could come in, or the Kuwaitis could come in. But I think it's a general an emerging market allocation which needs to re-emerge, and India needs to get its fair share of that. I don't think there's any specific block which I at least can identify which.
We've debated this before, that the whole valuation story about India always, even at 18,000 levels, or sometimes even at 20,000, remains a compelling story. Because there is always this hope that they will be re-rated, and there is that fear that we will continue to get stuck in a range. I mean, we don't seem to ever get down to the re-rating story.
Re-rating in terms of India as a market?
Yeah.
Well, that's a bit unfair, right? If you look at last year, what was the move we had last year was that India does re-rate. Now, and you're saying it's pulled back again from that.
Yeah, it's very quickly it doesn't seem to make a new base. We seem to be hanging around at 18,000 levels for the past 3 years, up and down, up and down.
Okay, so leave us at the index for a minute. And re-rating is both a real economy as well as on the index. And I think a lot of people have discounted the fact that the last few years we managed to put 8+% growth.
Yeah.
And I think it needs to continue. I think we most people remain cynical that we can't maintain that growth, or this is a blip. I think it just, before you know it, you're going to see another 8% growth. I know there's expectation that it's going to be at 7.8 or whatever, but still, even at 7.5, 7.8%, you can't go wrong. I mean, you cannot be displeased with a 7.5, 8% growth. At the end of the day, there aren't too many countries in Asia or other markets, which even Indonesia, which is growing at 6+%, India is doing well.
But remember the days when Indian markets used to move ahead of the economy, and now suddenly we've got the
that was a time when markets were a lot more liquid.
Yeah.
There were fewer players. So actually, again, going back to my theory on more liquid markets, greater depth. So the movement, it takes time to have an impact. Historically, go back 15 years, or when I first came to India, or a decade ago, fewer players, small amounts of money could move the markets. Now, even larger amounts of money don't move the markets as much. I think it's a sign of a mature market.
Certainly, but there was always also the sense that the Indian markets always knew that yes, we're going to grow at this 9% level, great, and therefore they would look at letting the markets be a little more, I would say, flexible, ahead of that.
Yeah.
Today we're seriously talking about a bit of a slowdown from a level, climb down from a double digit straight off to 7.5, 7.8 on a realistic term. Does that become a real big reason for why we will remain stuck in a range?
No, I think the other reasons to be in the range right now are the few I mentioned earlier. I think if you get the political situation right now, I mean, that doesn't help our cause. It's making headlines, as we all know, on a daily basis, and not only in India, globally. I think the economic headwinds, independent of the stock market where it is, interest rates, oil, we haven't talked about oil, that has to have a knock-on effect on growth here. So I think 18,000 is obviously a function of where the GDP growth is, but also perception of the overall environment. The environment changes. I think we don't necessarily need to be at 18,000. We probably will be higher, even at 7.8% growth.
Two FIs I spoke to this morning said, hold on to your cash. Would you echo their opinion?
That was my first comment, right? I think we can trade down a bit from these levels, which won't be that. I don't think it's a crisis, but because I think, again, maybe I'm an born optimist or live in perpetual hope.
Why do most bankers and traders use that line, I wonder?
I wonder too. I think there's maybe a small correlation to our day-to-day job. But having said that, and you didn't interview me from 95 through 03, I was never this bullish, actually, on this country or on the markets. So I think.
But markets also had some peaks during that period.
Yeah, and the peaks were always a function of perpetual hope, right? Monsoons would create a peak, or the credit policy would create a peak, or the budget would create a peak, and then again start coming off.
In that sense, we have stabilized as a market.
I think we no longer look for quarterly events in our equity markets, or we don't look for events to drive the markets. It's much more corporate growth, corporate performance impacting the market.